In the energy quadrant, both natural gas and crude oil crushed again today, but we have to talk about crude oil as it gets below $55 for the first time since March, getting all the way down to almost $54 even on the global trade threats and what that might do to demand. And we're talking about crude because it is the one that is reacting the most to the sell-off we had in the equity markets, as well as to the potential destruction or partial eradication of demand if the global economy suffers from, again, all these trade tensions. I mean, this is definitely stock related. Crude oil had its worst week since December of 2018, worst month since November of 2018, being down almost 7.5% on the week and close to 13.5% on the month as we finish out the month of May. Those are very big moves. I know crude oil is the most volatile commodity on a regular basis, but this is a very large move over this past week and over this past month, erasing most of the progress, if you look at the upside as progress, by OPEC and OPEC Plus in their production cuts. So it's almost a certainty now that OPEC and OPEC Plus will continue these production cuts past the June 30th deadline. They're meeting June 25th and 26th. I don't know how much of this damage is going to be a get back by then, especially if these tariff threats between the U.S. and Mexico, actually U.S. on Mexico. Mexico didn't respond with any retaliatory threats yet. Actually, Mexico said, the Mexican president, Lopez Obrador, said that he would actually respond with great prudence. So there's no threat of retaliatory tariffs at this point. But if they were actually just negotiation tactics to ensure some border security on the other side, you might get back a decent amount of this particular crude oil sell-off, but it would be almost dependent on the stock market rally and whether we got any of that back. As you see the Federal Reserve, chances of a rate cut now going up into the 80% range in December and up past the 75% range in September of this year. In the face of all that, rig counts actually rose by 1 versus the expectation for this week, and U.S. production rose last week by 100,000 barrels a day, but the 4-week moving average, which is really what you need to look at because that's what it's going to be over the course of a year, stayed flat. It's the 5th week in a row now where the 4-week moving average is at 12.2 million barrels. We'll see if that 12.3 million barrels that registered last week on the weekly register is going to continue long enough to move this past on the 4-week moving average. U.S. retains its position as the largest crude producer in the world, again continuing to pressure crude prices just on a supply basis. These new trade threats are also hitting the demand side. Very bad week and bad month for crude oil futures price.